Thanks so much for joining in. Let's talk about your stance on the markets right now. You're fairly bullish going forward. You continue to remain positive, although you're expecting markets to remain range bound. Given that divestment, earnings, global key events seem to be already factored in or have already transpired, what's going to be the next big trigger?
See, the next big trigger is clearly the sustenance of recovery, right? So the festival season as such was reasonably good, right? So if that recovery which has started from the festival season, if it sustains in the second half, I think the markets are more likely to do well. So the visibility on that will be something like the auto numbers, right? So which is a high frequency indicator, right? So these will be the key factors which the market will be very, very closely watching for the sustenance of the recovery which has set in place right now. So I think that is one. Second, of course, will be what happens on the global front. If global scenario continues to remain constructive, if we have a trade deal by the end of the year or even early next year, I think that's going to be positive. So overall, what we are seeing is that there is a positive construct, but visibility on the recovery is going to be the most critical factor going ahead.
Okay, well, that visibility doesn't seem to really be, very clear at the moment, Naveen. So in light of that, what does one do? Do you stick with some of the expensive stocks? Are you expanding your portfolio? Are you willing to kind of, see a more risk-prone scenario?
See, one thing which has happened is that the volatility for the market has come down from what it was probably, let's say, around in the months of July. So from an volatility levels of around 18, 19 on the VIX, we are now at around 14, 15 kind of a range, right? So once the volatility declines, it means that more mid cap and small cap start getting more focus. Right. So I would suggest expanding the portfolio, adding more mid cap and small cap stocks, right? Wherever there is a higher level of beta with regards to the economic recovery, those are the areas that we will add. So something like in autos or in the financial services, we will try and focus more on the small cap and mid cap names, adding to our portfolio, which can generate a significant alpha.
What's your take on some of the telecom names? I know they're not really on your list at the moment, but have you taken a look recently, given the move that we're seeing on the back of recent development?
Yes, so our take on telecom sector is again based on what happens from the government in terms of the floor pricing and in what form and fashion it actually comes out, right? So the telecom sector is hinged on two factors. One is that there will be some regulatory development in terms of floor pricing, and the second aspect, which I think the market tends to play more aggressively, is that in a scenario of a two-player market, it's going to be Jio and Bharti, where Bharti will benefit, right? So these are the two scenarios which the market is playing, are the themes that the market is playing. We believe that a floor pricing is a very, very critical aspect for the telecom industry in the current scenario, where there has been a heavy levy of AGR dues on the incumbent players. So I believe that if there is no floor pricing, or if there is no major mechanism to get the tariffs up, we are likely to see that the incumbent stocks, even Bharti, could correct from the current levels. In a scenario where there is a floor pricing, of course, then more players will benefit.
Naveen, morning. Is there more money to be made in PSUs after the rally in anticipation of divestment that one has already seen, or do you think the best is now way behind us?
So, so that's always a tricky play, right? So when there is value, of course, these stocks tend to rally. So this, let's say around 3 months back, there was a lot more value in these names, any of the PSU names. So from that perspective, there is limited value. So if I were to talk about something like, let's say BPCL, I feel that there is very limited value from the current level. So we have a reduced rating on the stock with a target price of 424, right? So from that perspective, I believe that there are challenges, but there are good PSU names like, let's say, SBI, which we discussed even last time, which is more of a play on the economic recovery and the resolutions which are going to happen in the forthcoming quarters. I think that's something which will be more interested in playing rather than the traditional divestment kind of plays.
Naveen, let's also understand what the outlook is when it comes to some of the large caps, because we've been seeing a lot of focus on very select names that have been, taking the lead or driving the market gains. So what is it, or what is the kind of criteria that you're looking at for, value picking some names within the large cap universe as well as within the broader markets?
See, from a value picking perspective, what we believe is that again, it's at the cost of repeating myself. So for example, let's look at a stock like, let's say, MARUTI, right? So which is a fairly large cap, major large cap name. For MARUTI, the clear factor will be the monthly numbers, right? So that's what going to sustain the valuations and the possible up move which can happen in the forthcoming quarters. So for the whole auto pack, it's going to be that kind of a structural shift in the numbers is what the market will be very, very closely looking at, because the channel inventory has come down. In case of banks, of course, resolutions are going to be the more critical factor. That's point number one. Second is, if there is a pickup in the credit growth activity going ahead, if they are gaining market share at the cost of NBFCs and things like that, right? So that's another factor for the banks. In case of IT, I think we will have to wait more in terms of what happens in the forthcoming quarters, because Q3 tends to be weaker for the IT sector, right? And of course, the large cap names are pretty much very close to topping out. So there are some challenges in terms of valuations for the major large cap names. So visibility and operating performance will be the most critical factor for sustenance of valuations and even possible re-rating from the current levels.
Okay, just a quick look as to what's holding out in the markets right now. Up 0.5% across the board. You've got the mid caps as well that are managing to go neck to neck with the frontliners. 11,979 is where we're currently perched at. E-Clerks makes a mention, 12% higher on that counter. AB Capital is doing very well, and I think this continues its stellar run-up after it witnessed that just last week. Inox Wind is firmly in the green. MAGMA FinCorp is holding out. Hathway Cables, Jindal Steel, as well as Reliance Naval and Eris Life Sciences and Jagran is some of the other movers. Naveen, what's your stand when it comes to the media space? We just spoke to the management of Sun TV a short while ago, and while they acknowledged a complete slowdown in ad revenue growth due to the kind of environment we're seeing, they say they will continue to invest in content, subscription revenues will continue to be healthy, market share, etc. will be strong. So when it comes to these, new crop of media players such as the OTT, do you think that that's going to drive away viewership from the traditional media channels?
See, that's a very, very long-term trend, right? So that's going to happen, but that's going to be a very long-term trend. India is still a market where the television reach is going to be a very, very critical factor, right? So from that perspective, if you look at what's happened with Z, right? So there has been a major resolution which has happened, right? So from that perspective, the stock has re-rated. The biggest overhang on the stock is out. So. And Sun is actually cheap. We are trading much cheaper to Z. So I think that makes a case to look at Sun at this point in time, considering the strong business profile that the company continues to enjoy. So from a perspective of whether the traditional media companies can do better from the current levels, I believe there is a healthy chance of that happening. But over the longer period, if you ask me whether these stocks can re-rate from the current levels, that will be a challenge because of the construct of the business and the structural challenges that the business faces. But in the medium term, whether there is a possibility of earnings growth improvement and some bit of re-rating than what we have seen, that is a very, very likely possibility in the short term or in the medium term.
Thanks very much then for joining in and sharing with us your outlook, your thoughts on the markets as well as individual sectors.